Today we're going deep on a project that's been quietly gaining steam, and now in 2025, is trending across every major analytics platform. SUI, a layer 1 blockchain that many once dismissed, but now has the attention of investors, developers, and institutions alike. So what changed? Let's get into it. Over the past few months, SUI has been one of the most searched coins globally, competing with Solana, Ethereum, and even XRP in weekly rankings. Why? 3 major reasons. Ecosystem momentum is real. SUI is no longer just a tech demo. In 2025, total value locked has crossed $500 million, led by DeFi protocols like Scallop, Navi, and Cetus. GameFi and social dApps like SUI Friends and Playtron are drawing both users and attention. The ecosystem is expanding fast, with active developers up over 70% year over year. Investors are now treating SUI like a serious layer 1, not just a Solana clone. VC confidence and institutional interest. Backed by Miston Labs, SUI raised hundreds of millions from a 16Z, Circle Ventures, and Binance Labs. That capital is now translating into real-world pilots, strategic partnerships in Asia, developer incentive programs across gaming and DeFi. This isn't a meme chain. Serious capital is at work. It's riding the next-gen L1 narrative. Just like Solana and Aptos in the last cycle, SUI is now part of the Layer 1 narrative again, but with a twist. It's being recognized as faster and more scalable than Ethereum, more developer-friendly than Solana, thanks to its Move programming language, backed by research-grade engineering, built by former Facebook Meta blockchain devs. Let's break down the technology and architecture that makes SUI stand out in the increasingly crowded Layer 1 race. Built by the Meta team, SUI was built by former engineers from Meta's blockchain project, including founders from Miston Labs. These are PhDs, protocol experts, and systems engineers who know how to scale software globally. This gives SUI institutional-grade technical DNA, a team that's already been vetted at the highest level of Web2 innovation, a unique focus on performance, user experience, and developer tooling. The Move programming language. SUI uses a customized version of Move, originally developed at Facebook. Why Move matters. It's safer and more efficient than Solidity, prevents common bugs like re-entrancy attacks, and is easier for new developers to build secure smart contracts. This makes it a developer-friendly platform, and that's key to ecosystem growth. Object-centric data model. Unlike Ethereum's account-based system, SUI uses an object-based model, meaning every asset on-chain is treated like a unique object that can be interacted with directly. Investor translation. This architecture allows parallel transaction execution, ultra-fast finality under 1 second, and more scalable dApps, especially in gaming and microtransactions. This is why SUI consistently posts over 200,000 transactions per second in test environments, while staying energy efficient. Horizontal scalability. SUI doesn't batch transactions into blocks like Ethereum or Solana. Instead, it processes them in parallel, meaning throughput increases as demand increases. That gives SUI a clear scalability edge in high-traffic environments. Summary for investors. Feature Ethereum, Solana, SUI. Consensus proof of stake, proof of history, Narwhal, and Bullshark proof of stake. Execution model, sequential, pipelined, parallel. Smart contract language, Solidity, Rust, Move, finality, approximately 15 seconds, approximately 2 seconds, less than 1 second. If SUI's ecosystem continues to grow, this architecture gives it the capacity to handle real-world demand, not just crypto-native users. Awesome. Here's part 3 of your CryptoPulse deep dive on SUI. In 2023 and early 2024, SUI was written off by some as just another VC chain, big money, no usage. But in 2025, that narrative is flipping. Let's look at what's actually being built and used on the SUI blockchain today. DeFi is heating up. SUI's DeFi ecosystem now includes Scallop, a native money market protocol with staking and borrowing, Cetus, the most popular DEX on SUI, with concentrated liquidity, SuiSwap, Creadex, and others. Building multi-chain bridges and stable pools. Total value locked, over $500 million, with steady, daily active user growth. SUI's parallel execution and low fees make it attractive for DeFi arbitrage and complex strategies, something Ethereum Layer 2 solutions still struggle with. GameFi is going native. GameFi is one of SUI's strongest verticals. Why? Because SUI's architecture, fast finality, cheap fees, and object-based assets, is tailor-made for gaming. Leading titles include Abyss World, an open-world RPG with NFTs and in-game economy, SUI Friends, which combines social pets with gamified identity, and Rift, a PvE battle simulator native to SUI. Game developers are choosing SUI because it's faster than Ethereum, easier to build on than Solana, and lets them own the full user experience. NFTs with utility. SUI isn't trying to chase blue-chip NFTs, it's building NFTs with real-world and in-game use. That includes dynamic NFT avatars in games, identity-based NFTs for DePIN and Web3 login, and asset-backed NFTs for digital collectibles with embedded smart logic. It's less about flipping JPEGs and more about next-gen digital ownership. Ecosystem highlights: over 8 million wallets, 2 million monthly active users, dozens of active grants and hackathons via SUI Foundation, and it's a top 3 trending chain by developer activity, according to Token Terminal in April 2025. Investor takeaway: SUI is no longer in beta. It has real usage, growing liquidity, high developer activity, and early signs of network effects. This isn't just a tech play anymore, it's an adoption play. Up next in part 4, let's talk numbers, SUI tokenomics, staking rewards, and what role the token actually plays in the ecosystem. Now that we've seen the tech and ecosystem, let's talk about the SUI token itself, because as investors, what we really want to know is, does holding SUI actually matter, and can it capture value as the ecosystem grows? Let's break it down. SUI is the base asset of the entire SUI blockchain. It powers transaction fees, on-chain smart contract interactions, gas for DeFi, GameFi, and NFT usage, and payment between apps and users. Like ETH or SOL, no activity on SUI happens without SUI. Proof of stake and validator model. SUI uses a delegated proof of stake or POS consensus. Here's how it works. SUI holders stake their tokens to validators, validators process transactions and secure the network, and stakers earn rewards paid in SUI, adjusted based on uptime, behavior, and protocol inflation. Current APY, as of the year 2025, averages around 6 to 8% depending on the validator and lock period. SUI staking is live through various platforms including SUI Wallet, Ledger integration, and third-party apps like Scallop and OKX. This offers passive income potential which is especially attractive during bull market activity surges. Tokenomics snapshot as of 2025, metric value max supply, 10 billion SUI circulating, approximately 2.9 billion SUI, or roughly 29% inflation controlled, less than 5% annually, unlock schedule, gradual until the year 2030, allocation community and ecosystem, 50%, early backers and team, around 35%, investors, about 15%. Token release is happening slowly, and most unlocks are tied to ecosystem development milestones, not dumped into open markets. Value accrual potential. SUI benefits from increased usage, which means more burned fees, staking that reduces sell pressure, and growth in both developers and users, leading to higher demand for gas. While it's not explicitly deflationary, it is scarce, staked, and used constantly. As an investor, it's important to look beyond the hype and into the backers, community support, and infrastructure strength that sustain a blockchain long-term. Miston Labs, the builders behind SUI. SUI was created by Miston Labs, founded by top engineers from Facebook's Diem, also known as the Libra project. These aren't influencers or anonymous developers, they're industry veterans including Evan Cheng, the CEO and former head of research at Meta's Novi, Sam Blackshear, the creator of the Move language, and George Denizis, a renowned cryptographer and systems expert. Why it matters. This world-class technical talent has a strong understanding of both enterprise and crypto-native systems, and they have credibility with venture capitalists and institutions, VC and institutional support. SUI raised over $300 million in early funding rounds, including backing from a 16Z, also known as Andreessen Horowitz, Jump Crypto, Binance Labs, and Circle Ventures. This capital isn't just for hype. It's fueling grants and hackathons, strategic partnerships, and global expansion, especially in Asia. SUI is especially strong in Southeast Asia, with partnerships in gaming, payments, and telcos. The SUI Foundation has been aggressively supporting builders through ecosystem grants, incentive programs for DeFi and NFTs, and infrastructure partnerships with Chainlink, Wormhole, and Layer 0. Also, Scallop and Navi are bootstrapping DeFi. SUI Kiosk is growing the NFT marketplace scene. Playtron and Aftermath Finance are pushing innovation in mobile gaming and modular finance. In the second quarter of 2025 alone, SUI funded over 100 ecosystem projects, up from just 12 a year ago. Partnership highlights: Google Cloud, infrastructure and validator support. Mystico Network, privacy layer for SUI. Ethos Wallet, leading wallet with identity integration. Layer 0, cross-chain messaging and bridging. SUI isn't growing in a vacuum. It's building with serious capital, technical expertise, and market momentum. This isn't just a Layer 1 trying to survive. It's one with a global strategy, a clear value proposition, and long-term support. Let's face it, crypto doesn't exist in a vacuum. Every Layer 1 has to fight for developers, liquidity, and users, so where does SUI stand compared to its closest rivals? Let's break it down. SUI versus Solana. Solana's strengths include a massive DeFi and NFT user base, strong retail appeal and developer activity, and the FireDancer validator client improving performance. On the other hand, SUI has some distinct advantages: the Move language, which is safer for smart contracts, parallel execution for better scaling under load, and a more modular architecture tailored for dApp development. Solana may still win in mindshare, but SUI has the cleaner long-term architecture, especially for devs focused on performance and customization. Now, let's look at SUI versus Aptos. This is the closest match. Both use Move, both were founded by Meta engineers, and both launched in 2022 to 2023 with big VC backing. Aptos has slightly more DeFi volume, but SUI is outperforming on GameFi. SUI also has deeper parallelism with its object model versus Aptos's block model. Additionally, SUI's NFT and dev activity is currently stronger, based on reports from Token Terminal and Electric Capital for 2025. SUI versus Ethereum. Of course, Ethereum is the king, but Ethereum is slow and expensive without Layer 2s, still has complex dev tools and a steep learning curve, and relies heavily on rollups and external scaling. SUI offers native speed and finality, easier onboarding for dApps and lower fees with more scalability, all without needing a Layer 2. Verdict: Ethereum wins on decentralization and liquidity, but SUI wins on UX, speed, and dev agility. Competitive comparison in 2025, chain, language, finality, scaling, strength. SUI uses Move, has less than 1 second finality, native parallel scaling, and excels in GameFi, dev UX, and speed. Solana uses Rust, has around 2 seconds finality, monolithic scaling, and is strong in retail, NFT, and speed. Aptos also uses Move, has about 1 second finality, optimized block scaling, and focuses on DeFi and dev experience. Ethereum uses Solidity, has around 15 seconds finality, L2 scaling, and is strong in ecosystem trust and security. Investor Insight: SUI isn't the biggest name, but it might be the most balanced L1 in 2025. Faster than Ethereum, safer and more dev-friendly than Solana, and more adopted and performant than Aptos. If it continues executing at this pace, it could become the go-to platform for scalable Web3 apps and tokenized infrastructure. As we wrap up this deep dive, let's talk about what matters most to investors. Where is the SUI price heading? And what are the signals behind it? We'll break this down in 3 parts: current price and historical context, on-chain strength, and short, mid, and long-term price outlook. Current price performance as of Q2 2025. SUI trades between 75 cents and 90 cents, recovering from its 2024 lows. Its all-time high was around $2. Current market cap is approximately $2.6 billion. Ranked top 40 globally, up from top 100 a year ago. On-chain strength indicators according to Masari, Token Terminal and DeFi as of April 2025, total value locked is over $500 million, 5 times growth year over year. Daily active users exceed 250,000. Transactions per second are averaging 8,000 plus. There are over 50 live DeFi protocols, with Scallop, Cetus and Navi leading. NFT mints are up 300% year over year, mostly tied to gaming projects. This is real sticky user growth, not inflated incentives. SUI price prediction, 2025 and beyond. Let's run through 3 scenarios. Base case, by the fourth quarter of 2025, we see steady growth in DeFi and GameFi, institutional partners expanding, and the crypto market stabilizing. The target price is between $1.20 to $1.50, with a market cap ranging from $4 to $5 billion. In the bull case, SUI becomes the go-to chain for GameFi and modular dApps. Developer adoption surpasses Aptos, and venture capital inflows increase. The target price here is between $2 to $3, with a market cap of $7 to $10 billion or more. And finally, the bear case. The narrative fades, competitors leap ahead, and there are delays in rollouts or developer stagnation. The target price in this scenario is around 50 cents with a market cap of approximately $1.5 billion. Long-term possibility. If DePIN, GameFi, or tokenized services take off, and SUI becomes the leading consumer-grade Layer 1, the potential for 2026 to 2027 could be $5 or more. But of course, that depends on execution, regulatory climate, and market conditions. Investor Insight SUI has room to grow. Network activity is real and trending upward. If the project continues to ship, SUI is likely undervalued at under $1, especially compared to Layer 1 peers. So after looking at the tech, the team, the on-chain growth, and the tokenomics, is SUI worth your attention as an investor in 2025? Or is it just another VC-backed Layer 1 that won't survive the next cycle? Let's zoom out. What SUI has going for it: an elite engineering team from Meta and DM, a scalable parallel execution model that actually works, real on-chain activity across DeFi, GameFi, and NFTs, strong developer growth and community incentives, and it's backed by top-tier VCs and institutional infrastructure. From a tech perspective, SUI might be the most efficient Layer 1 available right now. Risks to watch. It's still early, needs to keep growing usage, not just launching apps. Competing Layer 1s like Solana and Ethereum still dominate liquidity. Large token unlocks are still ahead. Watch the supply schedule. Retail awareness is relatively low compared to the top 10 chains. This is a high upside, mid-risk asset, especially for those willing to hold into 2026 and beyond. CryptoPulse final take SUI isn't hype, it's infrastructure. The architecture works, the ecosystem is growing, the token has real utility, and developers are choosing it for performance and user experience. Is it a guaranteed 100 times return? No, but is it a strong Layer 1 bet in a market that's pivoting towards scalable consumer decentralized apps, gaming, and real-world use? Absolutely. What do you think? Is SUI a smart bet for this cycle? Or are you backing another Layer 1 instead? Drop your thoughts in the comments. And if you found this deep dive helpful, like, subscribe, and share CryptoPulse with a fellow investor who's building their portfolio the smart way. Until next time, stay sharp and stay curious.